Usually, you check a financial dashboard, the signals basically line up. The sky gets dark, it rains. But looking at the market data today, June 29, 2026, it's just, well, total mess of contradictions.
Yeah, it really is. I mean, the market fear and greed index has completely plummeted into extreme fear.
Exactly. But right under the surface, massive whale wallets just quietly swept up, like 270,000 Bitcoin. So our mission for this deep dive is to figure out this exact contradiction. Why is Bitcoin trapped below $60,000 while the smartest money is buying?
Well, to understand why those deep-pocketed whales are buying, we kind of have to figure out who's relentlessly driving the price down. And right now, that downward pressure is just incredibly mechanical.
Right. I mean, let's look at the sheer volume leaving. Over $4.1 billion exited U.S. spot ETFs in June alone.
Yeah, and BlackRock's IBIT fund accounts for, what, $3 billion of that?
Yeah, exactly $3 billion. But I'm struggling to see this as some strategic exit. Are fund managers just blindly dumping assets to hand cash back to departing investors? Like a forced estate sale?
That's actually a perfect way to look at it. It literally is a forced sale because of SEC cash redemption rules.
Because they can't just hand back the Bitcoin, right?
Exactly. Authorized participants have to liquidate that Bitcoin into the spot market to return fiat cash. So you have this generalized investor anxiety being instantly converted into relentless algorithmic selling.
Which is exactly what drove the intraday price down to $58,800.
Right. And that sustained algorithmic pressure actively fractures major corporate treasuries, too.
Oh, for sure. I mean, Strategy Inc. just broke their infamous never sell mandate. They liquidated $2.5 million in BTC.
Which is pretty wild to see.
It is, and they even filed an 8K to authorize up to $1.25 billion in future sales just to replenish their fiat reserves. Even Ripple CEO openly called this debt-fueled leverage model structurally unstable.
Yeah, it really exposes the fragility of treating Bitcoin like an infinite corporate credit card.
But, I have a hard time believing this price ceiling is entirely driven by ETF outflows and corporate panic. Isn't there a larger macro wet blanket here?
There absolutely is. You have to look at the broader monetary ceiling. At the recent ECB forum, the new Fed chair, Kevin Warsh, took a really hawkish stance.
And when central banks signal higher for longer interest rates, that just suppresses risk assets everywhere.
Exactly. But the real systemic fear right now is the impending Trump versus Cook Supreme Court ruling.
Right, because that case directly threatens the independence of the Federal Reserve.
Exactly. And when institutional allocators see that level of structural uncertainty, they don't buy the dip, they just flee straight into safe cash equivalents.
Okay, so institutions are running for the hills under macro pressure. But that brings us back to our contradiction. Those whale wallets accumulating 270,000 Bitcoin, they seem completely unfazed.
Well, they are looking past the current macro squeeze and betting heavily on regulatory restructuring.
Like the U.S. Clarity Act. I saw polymarket odds for that passing just spiked to 69%.
Right, and that compromise only happened because lawmakers agreed to explicitly ban passive stablecoin interests.
Which prevents a massive deposit flight from regional banks.
Exactly. And meanwhile, the EU is dropping the hammer with MiCA regulations, threatening these massive 12.5% fines for stablecoin violations.
So the net is definitely tightening. You can see with the IRS retroactively targeting high net worth investors in Puerto Rico with 10-year look-back audits.
Yeah, regulators are going after the plumbing and the players. And that aggressive compliance net is pushing capital to behave differently.
Right. And then you add in the massive KDDI data breach in Japan, over 14 million user credentials exposed.
Which inevitably leads to massive SIM swapping attacks.
Because hackers intercept text messages to bypass two-factor authentication, right?
Exactly, making centralized exchange wallets highly vulnerable.
So whales see IRS audits on one side and exchange vulnerabilities from telecom hacks on the other.
Which is exactly why they are sweeping supply off those centralized platforms and locking it away in self-custodied cold storage.
Wow. So for you listening, today's price action boils down to a structural clash. Automated ETF distribution is just mindlessly pushing the spot price down.
And it's running headfirst into those deep-pocketed whales, quietly sweeping that supply into cold storage.
But the broader question is how this market functions going forward.
Right, especially since the Bank for International Settlements just released a pretty stark report on stablecoins.
Arguing that they technically fail the economic definition of money, right?
Exactly, because they lack what they call seamless cross-ledger parity.
Meaning a digital dollar on the Ethereum network isn't treated the exact same way as one on Solana. There's friction.
Precisely.
Which leaves you with a critical question to ponder. The dashboard is flashing mixed signals, but if the very stablecoins acting as the bridge in this ecosystem are fundamentally flawed according to central banks, how will that ultimately reshape the digital liquidity you rely on?